Hello, everyone. Sam is here from creativetradingsystems.com. Making this a small video about pound USD pairs. I'm going to show in this video, but what I'm showing actually here is that I had a couple of requests. So I said, okay, let me make a video and make it public so everybody would know that how can we make an entry using a 40-minute chart reversal. 40-minute chart setup or reversal when the price is making a turn either up or down. Then how do we make the entry with the minimum stop loss? All right, so all right, let's get started then. This is the 40-minute chart. By the way, this is the weekly chart of pound USD, and this is the monthly chart that, this is where it is, and it's below 1409, below 1435, and it may drop even more if we don't go above 1409. My long-term target is this, and this target is still since 2018. I made the chart the first time showing this target when we were here on 2018. So we came down here, we went up there, and then I made the chart again saying that, we're going to be coming down. So far from here, we are here, we're breaking this to the downside, these levels, and now we're going. So now I had this, actually it's coming down, right? But it doesn't come down only like in a straight line. So it's up and down and up and down. So you have short setups, you have long setups, you have some bullish days, you have some bearish days. It depends on the fund days. So this is what we had earlier. And I on the other computer, actually, I did. So let me show you this. This is the chart on my laptop, actually. This is the other account. So I saw this setup here, right? So what is the setup? Is that it went down and then it's going up. It's 1200. So you saw the 1300, right? 1350. So the lowest point of on this chart was 1409. So below that, we really don't have any level to work with, right? So what do we work with for these highs, these lows on the even 40-minute chart? So this is the high. This was the high, and the price went above and then came back testing it. So when it came back testing, and then now from the top, it made a reversal candle. So what I would do is that if I want to trade this counter trend, then I'll go on a 7-minute chart and look for my short entry. Similarly here, if it is bouncing from this support, right? And if I get a reversal candle, which is right there, it's the reversal. Let me go on the broker side and then I'll, okay, here. So see this, let me open up a little bit. See, this is the reversal candle, this white candle. Let me open up a little bit more so it's clear. All right. So from the bottom, the reversal candle is this white candle that opens up above the last red candle. Coming down, it's this candle. This is a reversal candle from the top. Okay, you can see it here. See, this is the reversal candle from the top, closing below the last white candle. Going up, this white candle closing above the red candle. These are the reversal candles, right? All right, so we had this resistance here, this high. The price came, and I said, okay, it nicely, it dropped nicely here a long distance. So if I get a reversal candle, then I'll try a 7-minute long to see what happens, even though the trend is down and all blah, blah, blah. But, it's just an Asian session, and then, pick up 40, 50 pips, it's easy peasy. So here, it came down, and look how nicely it bounced, right? So right after that, so let's check the time. The time of the closing of this candle is the same time of opening of the next candle. So next candle opened up when? October 5th, 1835, right? So 1835. Today, 1835. So what really happened on 1835 on a 7-minute chart? This is the 7-minute chart, okay? Pound USD, right? So if you look at the time, it says 21, 20, 19, 1855. So 1835, right there. Okay, so that reversal candle, let me mark it. That reversal candle ended here, right? on a 40-minute chart, right there, this reversal candle, because the time of this new candle open up is 1835. Exactly at the same time this ended, this started, 1835. After this, I need a bullish entry. If I may have it, then I'll take it. The rules: yellow need to be above the black, the adjacent black. See this white, black, and yellow. These three has to flip on the other side. Okay, they are aligned to the downside. Now for long, they have to flip the other side. So right here, they are not completely flipped. But this, and then at the same time, I need an entry when the indicator is all the way down. So this is the place you can see that this is yellow, black, and white. Before I had another condition that, and it's still, right, that the yellow should be above the red as well. But I knew that it's going to bounce, it's bouncing, and it's very close to the red anyway, right? So I said, okay, this looks very nice. So this is the entry that I took, and that, let me show you the chart. If I have, okay, here, see this entry, I shrink the chart, this one, so that, the whole, all the bars come into the same chart. Here you can see that the bars are going out, right? So you don't know where the heck they end up. So this is where they end up when I close the trade and then save the chart. So this was my entry, and was on a 7-minute chart. It's very fast. So by the time I took the entry, the price was all the way up here. See this buy entry? And then SL was here, and then it started to go up. My SL moved to break even, then it comes down here, and then barely, save myself. And then it went up, and then now nice and clean, 65 pip. I could have saved, closed the trade here, but I was out, wasn't here. So after somewhere here, I put my, at that time, the SL was like maybe 5 pip losses here, somewhere here. So I went out, and then I came back. I saw the price was here, so I decided to close it because it's Asian session. This is enough. Always, and then look what happened. Look what happened. This big move that you can see is so big, right? This is 7-minute chart, but look what happened. On a 40-minute chart, it is from here to here. That's it. Let me shrink this chart back. You see that? This is small, tiny, bitty, cheeky move. That's what it is. So I got in here somewhere, and I cash out this. This is, see from here to here on a 40-minute chart, that's almost like 90 pip move. Out of that, 65 out. This is how it is. So this is, and every single place where, look for this one here, right? You could have done the same thing. From here, could have done the same thing. From here, you could have done the same thing. From here, you could have done the same thing, right? Same thing. The 40-minute, the alarm beeps, immediately you go see the 7-minute chart, you find a long entry, you make the entry, put the SL, that's it, and you have a nice, easy, even here, beautiful trade. Look at how many pips here from here to here. Can you imagine? That's just 350 pips in a straight line, right? Even from here to here was what? 128 pips. Okay, so this is the beauty between this is a combination. I also have a, like, for example, this one, right? So you take a 7-minute entry, you cash out somewhere here. This dip is a 20-minute entry. This is a 40-minute setup, but in this, you have 7-minute entry, cash out 40, 50 pip. Then this dip is a 20-minute entry. You make an entry here, and then this is 20-minute entry. This is 20-minute entry. All of these. So that happens all the time. So this is the move from here. 7 minutes right there. See this little wick? This is a 7-minute entry. You cash out here. This is a 20-minute entry. If you go and change the chart into 20-minute, let me show it to you on the 20-minute chart. What I'm talking about, you see. You're going to the upside, and that was it. See all these dips, 20-minute entry, 20-minute entry, 20-minute entry, right? Then coming down again, 20-minute entry. 20-minute entry, but got shot. Then short 20-minute entry. Then this is the move that I'm talking about. I got in here and then cash out, and it's keep going up, right? Maybe later on I'll get a 20-minute entry, from the 20-minute chart, from this chart. right? In the London session, right now it's the deadliest time. It's like completely dead. From, let's say, the worst time is between 10 p.m. to 12 p.m. Eastern time. All right, so it's very, very bad, very slow. Never to trade in this and that time, even though if you have some good trades, but that's how it is. So I hope it's clear that how to take the 7-minute entry after a 40-minute setup. When the 40-minute alarm beeps, immediately you go see, and not only all the time that is going to play out. Then let's say with a 40-minute, right after the reversal, and then this drop, right after a reversal candle, this prices start dropping and then continue to go to the downside. That's it, no more long. Then you look for short again. All right, so but if it is going to go the other side, it will flip here. These three lines will flip the other side. The other, they will align the upside. They're aligned here, the downside. Right? Reversal candle made that go the upside. It turned the other way. And then from there on, this was an entry, this was an entry, this was an entry, all of those. You can take it. All right, so this is it for now. Just wanted to show you guys that what is the combination between 40 and 7-minute chart, right? Same combination with the 40 and 20 if you want to be, a little bit conservative, it's like be safe, don't be, the 7-minute chart is a little faster, but I don't like to waste all these pippage and then later on get the 20-minute entry, right? For example, here, this whole thing, and then maybe I'll get a second, like for example, here, you drop all the way, it's like how many pippage from here to here? It's almost 100 pip. And after that, you get this entry, right? So what I do, just like here, take a 7-minute entry, go down, cash out 50, 60, whatever, then wait, get the 20-minute entry, and then go down another 100, whatever. This pair moves every single day. Average moving is 150 pip every single day from top to bottom. This white line is the daily open line, means the day started from here, so it went up. The highest point of the day is this, the lowest point so far of the day is this, right? And the days continue, day ended here, actually here, right? So what is it? The highest point, the lowest point, right? That's the daily range. So calculate that. And you see this day, it moved 260 pip, 263 to be exact. So a pair moving like that, you can easily cash out, get an entry like this, and then cash out 120, 130, 140 pip, easy. Like today, I had similarly, a bigger mover than this is pound Aussie. Let me show you if I have that pound Aussie trade. Let me just quickly go there. Show you pound Aussie today, just like that. But pound USD I missed, but pound Aussie, look at that. Right there, boom, 150 pip. This pair also has daily range around 160, 170, something like that, bigger than pound USD. So this is how it is. But like this one, this 20-minute entry here, and then you see this 20-minute entry, and then again this 20-minute entry. So it dropped like that, and beautiful trade. As simple as that. So stay with the system. You gotta have a system to follow mechanically, like a robot. No emotions or anything. You just see the setup, just take it, wait for the setup, be patient. If the setup is not there, be patient. Don't pull the trigger without the setup. That's dangerous. Okay, I hope I explained that 40 and 7-minute combination clearly. Even if there was David, I guess, that would ask. So if you still have any problem, then email me, and I will explain. If I have to, I'll come on the Zoom and then explain it to you. Okay, so this is it for now. Thanks for watching, and have a wonderful, wonderful rest of the trading week.